Welcome to Markets Now. I'm Michelle Rourke with Scott Varilek of Kooima Varilek. Finally seeing some green on the grain board this morning after a pretty ugly week. Cattle futures to the plus side with hogs lower. All right, let's talk about cattle. We've held this futures market together pretty well here this week in light of the fact that we are seeing some lower cash trade again this week, aren't we?
Yes, and thanks for having me. So, yeah, I think we're lucky to be holding this together, is what it kind of feels like to me. It was a nice little breath to kind of stop the downtrend and just maybe feel a little bit more sideways trade, but we've got some lower cash. It's starting to break. Okay, what does that mean? We had our spring rally, historical prices, historical basis, unbelievable. So, I mean, it's been such a good run here, and Packers came out, a month ago and bought, as many cattle as they could for the last week of June, beginning of July. The kind of basis, the kind of prices, like you are stupid to pass it, kind of was what it felt like. I mean, when you're talking 245 with a low 220s board, wherever we were, I mean, you gave them to them. You took those because you have some huge closeouts. We're making a lot of money on these cattle. So now the packer can try to sit a little bit. We've got a couple of plants that were dark for a couple of days in the week, and then we had some flooding issues in Nebraska. So some problems there to help them slow down. But the packer's just trying to get leverage back, and I think they're doing that because we have a producer that knows how much money we're making on these cattle, and they want to get them moved. I mean, you want to sell. Yeah, you didn't get the high, then maybe they weren't ready yet, but you're still aggressively trying to get stuff marketed, getting them sold, because we've seen a $10, $12 break on the futures. We're all nervous, know how much money we're dealing. So I think that's just it. We're trying to get a move, trying to get some prices. We've got, 222 to 225 in the South. It's been a little bit more of a range on all of the cash, 230 to maybe 232 in the North. So those prices are lower than what we're used to, but they're still big prices. So it'd be hard for me to say, well, I think I want to hold out and try to get higher now because, coming into July, it's getting hot. Demand gets a little slower, wanting to get them sold. So that's kind of the drift of pulling it lower, and the futures aren't wanting to aggressively go higher yet.
But if you look at the charts, Scott, with the rally that we've had here, the trend lines are still holding, and you would have to have a major correction to change the trend in the cattle futures, wouldn't you?
Yeah, and we all know there's a lot of room below us. Like I said, we know how high we are. And this last little rally was pretty steep and sharp. So, charts are holding together okay yet. We were overbought. This is, now we kind of almost got to this oversold portion with this, a slower break, which thankfully it's a slower break. It's a market that usually takes the stairs up and the elevator down. But we've got some nice long-term uptrends that are still in place at some good prices. I mean, long-term charts, you're looking at 190, 192 before you break major uptrend. So sitting up here above 200 and all of these prices, we're still okay. Yeah, some of the short-term, breaks can scare us a little, but long-term feel is we're still okay. If you're looking at it from a technical standpoint, but we still, have a lot of room below us, and that's kind of the scary part of it.
Yeah. I want to go back and touch on something you mentioned, which is the lighter slaughter, 105,000 yesterday. Talk about who's down and why are we seeing this? Is it, flooding? I know that's been part of it.
Yeah, a lot of issues there. Grand Island, they got a lot of rain down there, so they had some issues. Sounded like so they were trying to go, couldn't. So they were dark for a day, and then Amarillo was down for a few days. Just hearing some worker issues. We've had the ice raids, we've talked about that, but also just the slower chain speed. Some of these workers I've heard, hey, they're saying I want more hours, so they're going elsewhere. Let's go to these hog plants. Let's move around. So it's just those labor issues, I think, are also a part. That's an ongoing issue for packers, and maybe seeing some of that happen. So I think if we would get, the packer would get some of this leverage back and get some green ink, I think some of those problems go away. So maybe they're more short-term issues for me. That's how I would place it anyway.
Yeah. In the meantime, the lighter slaughter has helped in part to pump up the box beef values. Choice right over $395 right now. So, man, that's pretty high. Second highest since what, COVID?
Yes, and that's the other factor in this whole cattle market. I mean, we talk supply, cow herd. That's where we've been, but look at this demand. How amazing it's been. Uh, we've got a domestic demand that's just been so great. Something we've been able to stand on for several years. It's just been saying, okay, if we move this market higher, are these consumers really going to pull back? And I just don't think we saw that big pullback. The prices of everything went up. I think a consumer got used to it. They still want beef. They still want high quality beef. So I still think that is completely intact and doing a great job. I don't see consumers completely turning away. We always have these debates. We're still looking at these coffee drive-through lines, very long. Spending $8 on a cup of coffee, or how many different TV subscriptions do you have? We go down those rants too. Some people 5, 6. I mean, just the way that we spend money, and I think beef is not second place in any of that markets. We still want it. We still have a good product. Consumer still has the ability to pay for it, and has been doing so.
Yeah, and that's why I said it was the lighter slaughter was part of it. We do know that demand has really been pushing this as well. Just quickly, cash feeder market, you said, is kind of cooling off just a little bit.
Maybe a little bit. I think producers they know how high these are, and these break evens. You watch these auctions and see a 225 break even. I'm not lining up to not ready to sign up for that quite yet here. So maybe a little bit of caution, saying, okay, we have bought some feeders a little bit lower than we did a couple of weeks ago. So starting to pull back a little. We generally don't have an index that's higher than what, this much higher. It's $9 higher than what the August futures are. That's usually the other way. So it's kind of I think I'll sit on my hands just a little bit more. I keep hearing that, saying, okay, this is more than I want to stick my neck out there. They're making a lot of money. We know cattle feeders want to dive back in and keep those yards going. That's what they do. But I think there's that little bit of an alarm caution sign going off. I think that yellow flag is waving, saying, okay, it's caution time. I gotta be careful here, because there's no way you can lock anything in on this. So this is the part we have to preach, to say, okay, if you have something, that you break evens well high, maybe you have a boat that's sinking. The best time to fix a sinking boat is immediately, rather than wait too long. So I think it's still having to find a way to put some kind of protection underneath that isn't going to make you money. It's just something that, hey, I got to make sure I can hold it together, because we know that potential break could be massive. And just as high as we are, and changing the way we operate, we don't want to put our operation at risk at this level, too much of it. So some, yes, but I think there's just way too much potential for a break that could really, really sting. And we don't want to be there for that. So I can be as bullish as I want, but if this market tips over, you could be in a world of hurt here.
Gotcha. Okay, so hog market is down this morning. Hogs and pigs report actually came in a little bit bearish, 100.3% in terms of the all hogs and pigs number. So actually we're expanding the herd. Is that what it looks like?
I think we're all a little surprised by this report. It just felt like this is not what I'm hearing in the country. It didn't really jive with what we see. So it came in a little bit bearish, and for me, we're looking at the March, May farrowings up, the under 50 pounds up. Those were the two numbers that I think are absolutely the other way. They're trying to do this via survey, and I get it. It's hard to do, but some of this data might be a little bit older. Maybe it changes if it's today, but I still think what I'm hearing in the country is going to have to win over. The disease issues are just too prevalent and hanging on, not going away. This is a time of year where normally, stealing feeder pigs, they're cheap. You can find them, you can buy them cheap, and you're having to stick your neck out there 4 to 6 weeks out to order them. And that just does not feel like what it normally is. The disease issues I'm hearing are worse than some guys have ever seen. So sitting here in production country for hogs, we're not lining up with what this report says. And I don't think that this changes our mind in the long run, saying, okay, maybe there is more pigs. I still don't think so. And I think that's why your opening range on these hogs was that dollar and change lower, and they stopped. It wasn't a, okay, we got more pigs, we got to keep going down. I think it's going to find some firm ground here. And that's the hogs. If production can really matter, if these fundamentals can really push it around, and sometimes the hog market can do its own thing. So that would be my thought. I'm standing on fundamentals yet, and hoping the hog market realizes that as well.
Yeah, and we have heard about a ton of disease, so I think your point is really well taken here. And there's been maybe a little doubt about the accuracy of the USDA report in the past anyways. Okay, grains, we're finally, after a bloodbath this week, seeing a little bit of short covering activity, but will we see more? Is this just in a month into the quarter report positioning, or are we reacting to the possibility of a China deal that does not actually include ag?
Yeah, a lot to unpack here in the grains. It feels like we've got, this break that continues to happen. We look out our window and say, wow, this crop is in great shape. We have not had any stress on it, planted it quickly in dry conditions, and just turned on the spigot, and it's been raining across a large area. So it's getting harder to find a cornfield that looks bad, or bean field. So I mean, things look really, really good. We're in good shape. So that's part of the break here. But lining up now, we're at the end of the half, end of the quarter. That's a pretty important time. And you've got the funds that are really, really short, especially in this corn market too. So could see some unwinding on that. And we've got a acreage report on Monday. So a lot getting rolled into this. It's a low price. It's a value buy. I get it, but I don't feel like that upside is just going to be that big. I think that we know what we're raising. We're going to have a lot of corn to chew through. We need that dollar to keep getting a little bit weaker. It's going to have to come from the demand side. Like you alluded to on the China deal, we are going to need that demand to get this thing to want to move the needle just a little bit more here.
I believe that you are correct about that. And let's hope that even if we get something bearish in the reports on Monday, that most of it is priced in here, because like you said, we're at pretty low levels. So, all right. Thanks so much.
And I hope so.
Yeah. Scott Varilek with Kooima Varilek. That is Markets Now.